Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for the 24th of October. It's Wednesday. And boy, did the bears come out to play, especially the last hour and a half of the trading day. Huge sell-off to end a pretty weak day in the market. Still right in the midst of earnings season. We have 18 S&P companies reporting tonight. We also have a Tesla. We have, I believe, 40-something S&P companies reporting tomorrow. So earnings are still very much on the forefront, but clearly the bears just want to sell. And they did. Here we have the S&P 500 after, really, not a lot of strength at all today. But I want to come in and look at a shorter term time frame, like say the 15-minute chart here to kind of illustrate how quickly, once it broke that low of the day, it really sunk. And we saw that across the board in our indexes. Very weak day, closing at the lows. Everything has broken support. It's not bullish, that's to say the least. Not able to build, again, as we've seen, on the few bullish runs that we've seen over these last couple of weeks. You might have the bulls in control for one day. There is not even a lick of follow through the next morning. And of course, the bears continue to be very much in control. Things are looking pretty grim on the S&P 500. Have to go into longer time frames to even see where support levels are. We're a ways away, closing below the 50 weekly average today. We don't have any support for quite a ways to go right now on any of the indexes, certainly not on the S&P. NASDAQ, who actually kind of showed up pretty well yesterday, was not immune to the selling here today. Again, just like the S&P, that last hour and a half or so of the market, we broke down. And again, once we broke, we were breaking the previous swing. Of course, that was our last level of support, along with intraday levels of support. I mean, it was ugly. It was definitely ugly. No signs of buyers from a broad perspective. The Dow, similar fate, of course. And the Russell, who has, of course, been, in my opinion, I think a lot of other traders' opinion, kind of the weakest, really continued to falter. Looking at the Russell on a weekly chart, you can kind of see that we're nearing a fairly important price from days gone by. No levels of support have been holding for any period of time during this sell-off, of course, but that was a previous breakout point, a support level. There is still a ton of weakness going on over in the Russell and the market as a whole right now. Some of our sectors got absolutely slaughtered too. Here we have the materials after kind of catching its footing at support yesterday, broke down here again. I just want to, let's just go to a weekly chart because that's where we are in the market right now. We're so far down that we have to go to weeklies to find support. Broke the 200 weekly, and probably more importantly, that old breakout point here today that did try to hold us yesterday, faltering through that today. Ton of bearish activity in that sector as it continues to struggle, really regardless of what the market is doing. Energy worked right back down to that bottom of that old trading range that we were looking at here yesterday. Not terribly surprised that it did that, but certainly did not expect it to do that in one day by any stretch of the imagination. We do have to respect it as support, but we do, obviously we're very weak, very extended in this department. No real levels of support for another little ways down on this sector right now. That is an ugly sector. There is no doubt about that. Financials, interestingly, kind of caught their end-of-day footing, and I think probably more just because the day ended than anything else, but it kind of caught that old breakout point, trying to catch its footing as support there. We're seeing, like I said, a ton of bearish, and that's what we're going to see until we look at a couple of areas. Utilities actually was able to break out, so that will be fun to see. Over on the industrials, broke down here as well, showing a ton of negativity in the industrials. Tech absolutely got slaughtered here today, just like the NASDAQ did, closing well off of its high hit point here today. Pretty ugly stuff. Now we get into our areas that did a little bit better here today. Staples actually was really strong early in the day, and then it just got caught up in that late day sell-off. Actually ran all the way up to resistance here in the Staples sector. Still closing positive on the day, certainly looking better from a technical, at least a bullish technical point of view than our other sectors that we've looked at thus far. But certainly a lot of selling off of that high, as it was not immune to that late surge of selling. Still in this range. Obviously, I think we have a pretty good idea that that is its trading range. Don't think it's a surprise that that's kind of where it stopped for the day. We've seen that active resistance on a couple of occasions. Overall, it still continues to hold steady. Utilities broke out relatively early in the day. A lot of strength over there. Held up pretty well, whereas the Staples really kind of sold substantially off of the high. Utilities, of course, clearly did sell off of the high, but nowhere to the same extent as the Staples sector. That's a nice little breakout that, of course, we've been watching for a few now. As we move into a longer time frame to see what's kind of ahead of us over in this sector, you can kind of see we don't really have any substantial resistance in the sector as a whole for $1.50 until we get into that mid $56 range. We got a little bit of upside room there. Very nice little breakout. Showed a lot of strength, in my opinion, at least. Not only breaking through, because again, we've watched that together, how difficult that area has been to break through, but also holding up amidst a ton of selling pressure to close the day. So certainly not everything is bearish. Healthcare, my old friend, you held support yesterday, broke down, and one of the better, technical breakdowns, in my opinion, today was the healthcare sector, simply because of how we traded yesterday. We had kind of held that support level, getting a clear signal instead of, it's just selling, actually getting a signal as it broke that support level. Approaching its 200-day moving average, will that be able to hold? So many of these other sectors have long since passed their 200-day moving average. I will respect it until it's gone, but clearly a ton of selling and bears are firmly in control. Discretionary, another area that really just got beat up good today. After really showing a lot of weakness. It had a great, a nice little rally yesterday with the overall market, but it had been showing a ton of weakness overall as a sector. Even before we saw the market sell off, really continues to be a very bearish area. Real estate kind of had an interesting day. Of course, one of those days that could have, I would have liked it to do something maybe just a teeny bit different. Of course, we broke out of that previous swing high that we've been looking at as resistance here today on the intraday. I'm sure triggering out some bearish real estate trades along the way, only to prove to be a failed break. We closed right at that same resistance level. I don't think you can consider that a buy signal, although we did break. We did not close, and to me, the close is what matters when it comes to charting. Otherwise, we get a ton of fake outs. Again, that's just me. So we have to kind of wait and see going into tomorrow. We're right there, but we did close, right below that resistance level, and I will, until proven otherwise, I will call that a failed break. If we're able to push through that again, then hey, then we can call it a break, right? But we clearly were not able to hold that breakout here today on the real estate. But definitely, it took off early over in the communication services. More of the same from the broad perspective, selling off early, selling often, and breaking its support level. Of course, this chart doesn't have a ton of history because of the newness of this sector, but this is as low as it has ever been. It closed at the low point, or just a penny up off, but very bearish. We still, again, we have a lot of earnings, but right now we are not looking good from an overall stock perspective. Very, very bearish, and very bearish end to the trading day. Over in gold, not a lot to see here. Continues to hold up, maybe drifts ever so slightly to the upside, but really not a whole lot has changed from a technical point of view in the gold market here today. Same really with silver. A little bit of back and forth. Selling off a little bit, but again, technically we are unchanged from where we have been for quite some time. In the metals, they continue to hold up well, but continue to not really get running either. So really not a lot to say that we haven't said many times in the metals market. Did see the dollar break and close here today. Able to actually finally break and close above that 96. Pretty good little run as the dollar certainly had a very good showing here today. Approaching, resistance, I think at around $97 was kind of our high point last time, but certainly a clean break from a technical point of view over on the dollar. Taking a look at natural gas, continues to kind of go back and forth in that trading range. I really think that coming out of this range is what the technical signal is as of right now on natural gas. Maybe there are opportunities. I'm sure there are some good opportunities from a short-term day trading perspective on natural gas, but it's very back and forth right now. It really seems very undecided, between as it trades within this trading range. So I will personally continue to wait for a clean break one way or the other before probably developing too strong of an opinion on the natural gas market. And crude had a nice little rally up into and briefly broke above its 200-day moving average. But that's a very bearish end-of-day candle, selling way off of the highs, closing very, very close to the lows of the day. Again, building that little floor, that little kind of floor technique we talked a lot about, easier to see on the intraday, but that can give us more reason or more opportunities to go bearish if that floor breaks. If you bring it into a shorter term time frame just to kind of see that floor, you can kind of see that, hey, we've established a pretty good floor. But if that floor breaks, that could be an opportunity or more bearish opportunities or more sellers to step in, because we really don't have any real support there. Our real support level, at least in my opinion, is down here. So while it did stop and certainly had a little bit of a pop today, certainly a very bearish close of day candle. So I think we watched that little intraday floor that has been building. I don't think that that's a floor I would want to buy off of personally. I wouldn't call that a great bullish spot. I'd really be looking at it if it broke as a potential short-term, probably even intraday bearish play, because there's not really a lot of support for a little ways from that. Continues to be overall pretty weak. It really started to maybe get people willing to jump into it early in the day, but on a candle that looks like that, I mean, when you basically hit the high and then sell off pretty much nonstop from there, hard to instill a lot of confidence. But watch that little floor as we move into tomorrow and the next day. Let's see how it behaves at that price point. But we saw a ton of selling here today, guys. There's no doubt about that. Overall, probably not a bad thing, because we certainly have had a bearish bias on the market with all of the weakness that we have seen. Certainly not all of them, like real estate didn't behave quite as bearish as I would have hoped it was going to, but that's okay. That's just how it goes. Certainly had it's interesting over in real estate. I think tomorrow's an important day. It's one of those, is this a failed break? If it gives up, maybe we see more selling. If it pushes through, well, probably would call it a technical breakout. So, but overall, we've had a bearish bias and continue to have one, because, well, when you're breaking support and failing at resistance, on a regular basis, that's where your overall, at least market bias, should probably be. I was really disappointed. I was kind of hoping to see some follow through off of yesterday's rally. That we saw a ton of resilience yesterday, but at least we didn't see any follow through, right? Didn't see any follow through. So even if you were thinking about, hey, maybe I want to get in on that, well, I don't know how you did with the way that the day traded. So very, very volatile market. Obviously, a ton of fear. It's one of those markets that can, big candles can happen, and they regularly have been happening, right? So make sure you are, position sizing according to your rules, not chasing after things, trading with the trends. Because, hey, when we saw bullish breakout on utilities, that worked out all right. Trading, bullish with the trend, it can work, but make sure you are trading with the trend. We're seeing a lot more negative trends right now than, of course, positive trends. With that, ladies and gentlemen, that will do us for today's market recap. But as always, it is certainly my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the Tackle Trading YouTube channel to keep up with all the videos that we're doing over here. And be sure to follow us over at Tackle Trading on Twitter to keep up with some of the things that we're watching throughout the market day. If you enjoyed the market recap, it is always helpful and appreciated if you give it a thumbs up. Let us know that we're on the right track and to help us spread the message. And with that, ladies and gentlemen, get out of here. Happy trading, and I will see you in the next one.